Welcome back. Hope you're having a good morning. Well, Gift Nifty suggesting we pull back a little bit, but keep in mind, yesterday we had a bust. In fact, now the implied opening is as flat as can be. Nischal Maheshwari, the CEO, Institutional Equities and Advisory at Centrum Broking, joins us on the show. Hi, Nischal. Good morning. Well, the big talking point has to be banks, namely the private sector banks, because if you look at the Nifty Bank, you'll see the problem has been on the private banking side, namely HDFC Bank. How would you approach the banking names from here on? Do you think that with valuations fairly in line with what you've seen on averages, as well as earnings outlook fairly positive, do they look good for more?
Morning, Nigel. I think so. Most of the private sector banks have really underperformed the broader index, basically. So whether it's a mid cap, I think even in Nifty, they have been underperforming. So I think this is a catch-up game which we are seeing for the last from yesterday. I definitely believe there is more way to go, and especially on the larger banks like HDFC and SBI. I think there is a good way to go for both these banks. I think valuation-wise, they have been pretty good. SBI, if I'm right, basically it is closer to 1 time or lesser than 1 time book. HDFC, on the other hand, is closer to 2 times. But I think if you look at historically, I think both of them been trading much below their long-term averages. So it's a good time to start accumulating these banks at these prices.
You also like autos. In the auto pack, do you like the OEMs, the four-wheelers? Do you like two-wheelers? Two-wheelers have reported good numbers, auto sales for the month of November. Would you want to bet with the financiers? Do you want to bet with the auto ancillaries? What's the best way?
So my call remains to be basically that rates have peaked out globally, basically. And in the first quarter of next year, we are going to see rate cuts happening across the world. And India would not be an anomaly to that. So I believe basically rate sensitives across the sectors are a good bet. So obviously autos are another rate sensitive. So I think rate sensitives that way, basically, I think the CVs, the PVs, both of them, they are big rate sensitives. So those are the two ones to play. But in the two-wheeler space, especially, I think the rural sides pickup is started to look good, basically. So I think Hero MotoCorp there looks interesting to us.
Hero MotoCorp looks interesting. You know, maybe just quickly look at what Asia is doing. Have the cuts become a little sharper from the last time that we sort of mentioned these? I think Hang Seng is down about 1.5%, and 1.6. Taiwan is down about 3/4, and a few other markets. Nikkei was down about 1 or so. But that's the global scene. Again, I mean, no real big incremental negative news flow or anything. It just seems to be a bit of a profit booking session, which we saw overnight in US, in large caps at least, and out here in Asia as well. The other sort of pack or part of the market which you like is consumer durables. Nischal, what here specifically?
So I think consumer durables for a long time now have underperformed. And I think if we are seeing strong demand coming from the real estate, I think the fallout of that would be basically, we have seen already things happening in the building material side. So whether it is wires or other spaces, they have started doing well. I am saying basically it's only a matter of time. The consumer durables will start also getting the demand. So I think basically it may be a bit early, but I think this is a good time because valuations are on your side. So I think that spaces also start looking interesting to us.
Nischal, you want to come in on HUL. Now, ITC has stolen a march over HUL. It was, undervalued versus HUL. There was that valuation comfort. But now the stock has outperformed quite a bit. Year to date, ITC is up 36%. HUL is up 1.5%. Thoughts on HUL from here on and the entire consumption basket?
So I think HUL needs to get its act together, basically. I think they have missed all the major trends if you look at it in the last 1 decade, whether it is food, whether it was fashion. I think both these trends, basically. And it's not that the parent doesn't have enough brands, enough products in its basket. So I think Lever needs to get its act together. Basically, they can't be just selling soaps and detergents out here in India. I think they have got people have a limited consumption or within the wallet, basically. So I think beyond a point, you can't be just selling these two products. You have to keep on looking for newer areas. And I think Lever has missed that, and ITC has done very well on the food side. They have been trying something on the fashion side. I think Lever needs to get there. Within the consumption basket, our topics remain to be ITC and Britannia. These are the two ones basically which we like within the consumption.
Nischal, you indicated you like rate sensitives broadly. Does that include real estate? Do you like, which stocks do you like in real estate? And what have you made of Oberoi's plans to venture into the NCR market?
Yeah, I think real estate is one of the rate sensitives, and I believe basically it's a cycle which has just started off. I think maybe in a couple of years, and historically real estate cycles have been 7 to 8 years. So I think there's a long way to go. Obviously, I think after the RERA has come in, I think the companies which are largely listed plays seem to be doing much better. And because obviously the competition goes down and these guys are much more better capitalized. We don't cover Oberoi, so difficult to make a call there. But our topics remain to be DLF and Shobha in that order.
Nischal, I wanted to ask you about some of these two-wheeler companies. Eicher Motors, yesterday that one was thumping ahead. I don't know whether, the market believes that the premiumization story or maybe the fears that more competition coming in has gone done away with and it's already been discounted. But the stock was running ahead yesterday. Personally, I visited the showroom as well and I saw a couple of the new launches and they look very, very good and there are already waiting periods out there. What's your view on the stock at these levels?
So I think Eicher has underperformed for some time, actually. I think this was a sort of a catch-up yesterday, which we saw in Eicher. But obviously, I think the premiumization story still continues to be. The only thing is, I think the realization is coming saying that the competition has been overhyped. And Eicher still remains to be a far away leader from any of the other guys, basically, as of yet. So I think that is what is actually sinking in, and people are once again coming back to ICE.
Okay, Nischal, we'll leave it there. Thank you very much for joining us, and it's good speaking with you as always here on CNBC TV18.